Hello, trading is closed on January 31st, 2020. Let's go over our calls. Look for the pattern with the early low. This is it. Monday's pattern has the early low as well. Prices were about 10 handles above fair value in futures when I made the video, so I wasn't certain these numbers were going to print, but they did print, and there's resistance right at the numbers. This is a pattern called the hole in the wall gap. Here's a wall straight up, a gap down. It's an unstable pattern. Typically this gap fills, you overtake the high and then reverse. And while there's no requirement to happen in a day or so, the vast majority of times you're going to do this quickly. You're going to, by no later than early Tuesday, go over this high and then reverse. Of course, if that doesn't happen, there's nothing saying it has to happen anytime soon. That's just the commonest time for that to happen. These holes fill at some time. We have an ultimate buy signal from the morning. Here's the target, 32.61.84. There's no time limit. Ultimately it prints, but the majority of cases you don't have to wait long. Another ultimate buy signal. These squiggles were called upon to retrace, and they did. Let's look at our daily chart. We have a reversal bar here involving the upper Bollinger Band, and the target, when that happens, is a challenge of the lower Bollinger Band. So we did the minimum required from that pattern. The target's met. It's not a stop and reverse, but the pattern doesn't have to give us any more than it did. Well, I want to show you what I said before. We said until we close under prior lows, we can't be certain this high is going to hold. Now, when you're railing like this, you get higher highs and higher lows, and until you get a lower low, that's still the pattern. Well, this low missed undercutting these lows by 4 cents, but it still missed. So until we undercut them and preferably close under it, we still have a pattern of higher highs and higher lows. And after dropping all day long, we closed over the midday low. It's actually a positive pattern, but which gets invalidated if you undercut this low quickly. That's going to be tough to do because this price is a fib target of the prior consolidation. We had this volume spike on Thursday. I said that didn't count. This was the one that mattered. Unless you beat that, that's the one that mattered. Well, you beat it in grand style. That's a huge volume spike. It's associated with a low. In fact, the last time we had a higher spike was way back in 2018. So this is the biggest volume spike we've had in over a year. And as you can see, doesn't have to be the absolute low, but volume spikes should make you aware that it's a sign of it's a sign of capitulation, and a low should be near if it hasn't already been seen. This is our wave count. I think we have 5 waves up here, but that doesn't have to be the end of wave Brown 3. I'd like it to be at least as long as Brown 1. That would take us into the 3460s. Now here's the 50-day moving average, and that's giving us some support at today's low. That goes along with the support from the fib target. There's some more support as well. Here's a 1x1 Gann fan line, which we hit directly, and if you extend the line backwards, you'll see how significant it is because it has a hit here and a direct hit here. So that's a major trend line. It's also what Tom DeMark calls a TD line. Take this point and this point, make a valid breakthrough, which we did, and although a return to the lines allowed, you shouldn't undercut it significantly until you travel above the line at least as far as you've traveled under it. Well, that's something like 240 points. We're nowhere near it. In fact, if we had 240 points from here, we'd be near our target of 3460s, which we got from the wave count. Nothing works every time, but we've dropped in a straight line too, but not through a very important trend line, and the rule is you gap under the line or the line wins, at least as far as Monday's concerned. Now we had an invalid break through this trend line that requires us to have a valid break at some point. We did. And although, again, it isn't a stop and reverse, we've met our minimum target, we don't have to go any lower. I really had a lot of trouble counting this. This one makes the most sense to me. If this is 1, 2, 3, 4, 5, should be an A of an ABC, but the important thing is this an ending diagonal triangle? I think it's the best way to count it, and if it is an ending diagonal triangle, the target is to retrace all of it, usually promptly, and go back up to this high. That's the same target we had from the hole-in-the-wall gap pattern. So if that counts right, then this drops over, and we're going to overtake this high probably with amazing speed. Monday's pattern has the early low. It tends to be a rally day with a high in the final hour of trading. Unless you drop big in the first hour or two, the day tends to be positive, though it doesn't really have to be. Almost always it is. The decline's already met its minimum targets. Bears need to gap under Friday's low to continue the decline. The volume spike, possible wave count, 50-day moving average support, and hole-in-the-wall gap pattern all suggest that quite the opposite will happen. Friday's low has the characteristics of a climactic bottom, and if that's right, we should promptly reverse all of Friday's decline, amazing as that seems. We're looking for pattern with the early low Monday. Tends to be a rally day, and if we don't gap under this, if this holds, we could be back up here before you know it. That's today's call.